Hey guys, Chuck Barone, Wednesday, July the 6th, 2022. Welcome to the show. And as always, we want to thank everybody for their support, for watching the videos, for liking and sharing with your friends, for all the subscribers. We are so grateful. We really appreciate it. Markets today had kind of a choppy day. Not a good day for the markets. Not a bad day. It was just a nothing really happening day. Stocks were up fractionally. I guess this market needs to see earnings really start to go down before it's going to believe stocks aren't going to have a big rally. I got a feeling they're going to get their wish sooner rather than later. And the proof's in the pudding. We'll see where this thing goes. We've been doing pretty good on our track record so far. I believe that we're right. I believe earnings are coming down. I believe the stock market's coming down with it. The bond market today, well, the 10-year did what it was supposed to do finally. Went up 10 basis points to about 2.91%. We had the phenomenon today of the inverted yield curve, which is typically a pretty much foolproof indication that a recession is looming. We'll see. All of this stuff's going to be confirmed pretty quick later this month. The bond market's just giving everybody another warning what's going to come. The metals market today, tough day for the metals. Gold market was down pretty basic, down 1%, a little more than 1%. Silver was basically flat, rallying up at the end of the day to close with just a small fractional loss. I think that silver and gold are being affected by the strength of the dollar right now. And the dollar index today up over 107. It keeps getting stronger every single day against the basket of currencies around the world. I think that the strong dollar is what's actually putting big pressure on precious metals, as well as the oil market. Today, West Texas closed again under $100 a barrel, down another 1%. Again, I think the strong dollar is weighing on this partly, and partly they're having expectations that travel this year, people driving in their cars for summer vacations and even over this past 4th of July weekend are going to be down. AAA will be coming out with their numbers soon enough. The second we get them, we're going to report them to you. I believe that over the 4th of July weekend, we've had a record amount of people hitting the road. I think restaurants and stuff people do on their vacations are going to be affected more than people buying gas. Bitcoin today was basically flat. It's holding support at $20,000. It seems like it's just kind of laying there a little bit. It can't figure out which way it wants to go. Now, when it rallies a little bit, it comes right back down. When it breaks 20,000 and goes underneath, it rallies right back up. It seems comfortable there for right now. We're waiting for a breakout either way, which will give us a much better indication of where Bitcoin's going to go, at least over the short term. Moving on to commentary today. The first thing I want to mention, we got some comments from people and we've been checking it out. We saw it in our results yesterday. A lot of our subscribers have not been getting notifications, have not been getting our videos in their subscriber feeds. Check your settings and make sure that you have notifications turned on for our videos. Ring the bell. Don't forget to hit that bell so you make sure you get those notifications every day when we release our new video. I think that, it was a big disappointment to us yesterday. I guess hardly anybody got notifications, and now I'm getting reports that people are getting notifications today of yesterday's video. It's, I don't know, YouTube stuff. So we're trying to correct it on our end. Just make sure that on your end that your notifications are turned on. You hit the bell so you make sure you get those notifications every day. Interesting thing, we talked a little bit yesterday about Australia and the requirements in Australia when you withdraw money. They want to know what you're taking the money out for. Apparently, this is something that really is happening there. We got a lot of comments from our viewers in Australia. Hi, guys. And, They made it sound like this is something that happens a lot there in Australia for even smaller withdrawals of as little as $1,000. Some of the responses people gave, but they would tell the bank, to buy jewelry for the wife. One viewer said hookers and blow. So I guess, people are having a little bit of fun with this. I think the reaction in the United States would be way less pleasant if bankers were going to start asking people why they want to withdraw cash. Moving on to these markets, guys, I'm telling you now, and I'm saying it again for the bajillionth time since we started this blog, this recession's coming. It's here. We're already in it. It's just getting started. Things are going to start turning, and they're not going to turn for the better. This yield curve, just another indication that the recession is here. The Fed numbers from the Atlanta Federal Reserve Bank showing negative 2.1% for the second quarter. Further confirmation that we're already in a recession and have been since the beginning of the year. In an earlier blog, we talked about recessions that are accompanied with inflation. Their average duration is a little less than 2 years. Their average market loss is 40%. So these are some things we can look forward to. We've probably got roughly another 12 to 18 months of recession coming up. It's going to be a pretty stormy seas for the stock market. I think that over the course of these 18 months, batten down the hatches, guys. We've been telling you to get into a protective position in your portfolios. Right now, the time is protect the principal. Protect the principal. We're going to have an interesting phenomenon later this month. I think it's around the 17th that the Federal Reserve Open Market Committee will conclude their meeting, and Chairman Powell, St. Jerome, as I like to call him, the miracle worker, will be announcing the rate increase, if there is one. The markets are expecting between a 0.5 and 3/4 point increase. The Federal Reserve is certainly talking strongly about fighting this inflation. The interesting thing is the very following day, they're going to release the GDP numbers for the second quarter, which are going to be negative, going to show we're in a recession. And Powell's going to be really stuck with a difficult choice, because if he does the things he needs to do to fight inflation, he makes the recession worse. If he does the things he needs to do to make the recession better, he makes inflation worse. So he's in a really tough position. It's going to really be interesting to see which way that this market goes, which way the Fed goes. Like I said, they've been talking tough on inflation, but the actions in the market have not been confirming that tough talk. So we'll see where this goes. The rest of this month's going to be very, very interesting. Moving on to the real estate market. Interesting headline in today's Review Journal. Ba-boom, you can see it. House prices are starting to come down. Vegas is kind of a bellwether town as far as real estate goes. The article went on to explain that sales totals here in Vegas are down 25% year over year. And this decline in sales just started about 6 weeks ago, already down 25%. The houses on the market, the amount of people listing their houses for sale, is up 61% from just last month and more than double year over year. Now, the number of houses on the market is still not a big number, but it's showing that demand versus supply is certainly equaling out pretty quickly. And the shocking thing is more than 25% of those properties listed have already reduced their prices. So prices now starting to reflect the reality in the market, real estate prices coming down. Before we wrap up today, I just want to comment on some of this stuff that I'm seeing that's happening that's really got me concerned. Greg Hidup talks about it a little bit in his videos, where he talks about the disappearing middle class, how they're trying to turn everybody into slaves to the system. My take on it is just a little bit different than that. My take's a simple one. It seems to me like the powers that be just don't want us to own anything anymore. We can kind of pretend we do, like owning a house with a $400,000 mortgage is actually owning it. But it seems like rather than ever owning anything, they want us to be slaves to debt, slaves to payment, payments for everything. Payment, 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 where you're literally, the second you get paid, your money flies right out the door, making payments, automatic stuff coming right out of your account, payments on everything. I was making some notes here. It's just a staggering thing that's going on. So in the real estate market, most people's biggest, what they call an investment, but also biggest expense, nobody pays off their mortgages anymore, guys. People take equity out, they continually stretch the length of the mortgage out, they'll stretch out the balances, making them go up, not down. And basically, even though you have a fixed payment, it's a payment you're going to make forever if you're not actually focused on trying to pay this mortgage off. Car payments. Back in the old days, people, they didn't let you take out loans like they're letting you take out now. Now, car loans go up to 7 years. So you're going to pay money for 7 years on a depreciating asset. And what's going to happen is at the end of those 7 years, most people are going to be sick of the car. They're going to trade it in for something new and start the whole cycle all over again. So now you got another permanent payment. The average payment on a car being around $650 with a shocking percentage of payments over $1,000 per month. Then you got credit card debt, where people are perpetually and forever in credit card debt. People, once you get stuck in this cycle of credit card debt, it's very, very, very difficult to get out of it. These credit card companies know exactly what they're doing. So they charge these outrageous rates that nobody hardly ever pays attention to, 25% or more on the money they're lending you, but they give you these tiny little minimum payments. And all that does is earn them more money in interest and stretch out the length of time, which adds us another layer of payments onto people's everyday monthly bills. Then you got student loans, which was something I call perpetual debt, where student loans just don't get paid off. People defer them, which only then lengthens the amount of time they're going to be in debt with these. And it seems like these days the debt amounts are so high that people have student loan debt literally till they're into their old age and retirements. And even medical stuff, which is really a sad one. But even medicine these days, guys, they don't cure anything anymore. They want to create a revolving door of patients who are in their office once a month, paying office visit fees, getting tests done, getting prescriptions you got to pay for every month. And even that has turned into a giant new scheme to keep you forever making payments, making payments, making payments. And then they wonder why the savings rate in this country is so low. Well, I hope, guys, that you've been paying attention to the few, we started a little bit about building wealth. So what are the points we made about building wealth? First point, save 10% of your income. Make sure you're living within your means, save 10% of your income, start to create abundance for yourself. The second thing we talked about was building your $25,000 war chest, your FU money, so to speak. So that way you're building security for yourself. So if you have a problem in your life, if something happens, you lose a job, you have a medical issue, there's some emergency, no matter what, you got the money put away to handle those emergencies. We talked about protecting your principal when you invest. Money is hard to get, easy to lose. The idea being, when you invest for return, of course. We want to make money on our money, but not at the cost of our principal. I explained the definition of risk is probable loss. So take due notice and govern yourself accordingly. And lastly, this debt thing. We've been advising you to try as much as you can to pay your debt down, to not add new debt onto your existing debt, to make sure that you get yourself in a position where if the poop hits the fan, you're in a position where you can survive comfortably and lead your normal life without having any kind of stress or extremis with your, making payments every month. Anyway, guys, that's the show for today. I really appreciate everybody tuning in. Like always, if you like what you're hearing here, if you think the information is useful, hit the like button. Comment, ask questions. I've been getting on those comments more and more, answering your questions and comments. Don't forget to hit the bell. Ring the bell. Make sure you're going to get the notifications for our new videos every day. Share the videos with your friends, people who need this information, which is going to be very important in this recession. And of course, if you haven't already, subscribe to the channel. Have a great day, guys. We really appreciate your support for the channel. I look forward to hearing from you guys in comments. Ask your questions. And until we talk again tomorrow, have a good day. Thanks.